What's the story with the US dollar at the moment? Obviously, we didn't have any tapering from the Fed, so what's driving sentiment of investors at the moment in terms of greenback?
Well, I think we saw that immediate pullback in the dollar, and I think that's obviously just due to the fact that the market really priced in tapering. The majority of the market clearly thought that we were going to see at least $10 to $15 billion of tapering at the September meeting. I wasn't convinced all along, to be quite honest. I think the US economy wasn't necessarily performing as well as people hoped. I think a lot of people were really pricing it to an extent just because they wanted it to happen. I think people are getting a bit sick and tired of the Fed dictating which way the markets are going. So I think people were really hoping that we were going to see some tapering, and I was in that category, but I wasn't necessarily convinced that the economy necessarily supported the fact. And also you've got a lot of the backdrop of things like Syria and the effect on oil prices, having that squeeze on the consumer, and the rising mortgage rates having a squeeze on the consumer, as well as things like the payroll tax from earlier in the year. So I think all in all, I think it would have been very difficult for the Fed to justify tapering. But like you said, the reaction in the market suggested that people really were expecting it and were really hoping for it. We saw a big pullback in the dollar, but since then we have seen it starting to rally again. But I think that's more to do with fears over the debt ceiling than anything to do with tapering.
I still don't get this idea that tapering on or off is dollar positive or negative, because you could argue it either way, and now you can still argue that the market has that safety blanket of QE, and surely that's good for the US dollar.
Well, I mean, it has the safety blanket of QE, but there's still no real evidence that the economy is on a sustainable path. I mean, we are seeing improvements here and there, but then all you have to do is look at the jobs report from last month and see the significant downward revisions to the number of jobs added in June and July, and also that pretty disappointing figure from August as well, to see that the economy is not really on a stable foot. So maybe the QE is benefiting the US economy somewhat, but it's not having really that desired impact. We're not convinced that necessarily the economy is going to be performing greatly next year either. I think it's going to be down to a lot of fiscal policy that's going to have a major impact as well. That's one thing Bernanke's really pointed to, and that's the reason why they're continuing to support it, because they just don't believe the economy is strong enough. And if you've got the fact that Bernanke's talking down the economic recovery while continuing with QE, for me it's got to be dollar bearish.
So what about these US budget issues? Is that what we're all going to be focused on in the next month or so?
Unfortunately, I really think it is. That's what we're seeing today. And I mean, again, I'm definitely in the camp of people who are sick to death of talking about debt ceilings and budget talks and negotiations in Congress over fiscal cliffs and sequesters and now debt. And I mean, we've had this before. We have this every 3 to 6 months. All we see is the Congress kicking the can down the road. And it's exactly what we're going to see now. We're seeing both of them play a bit of hardball. Barack Obama insisting that he wants the debt ceiling raised with no, while offering nothing in return, while the Republicans are looking for some cuts to Obamacare as an offer for raising the debt ceiling. But even if we do get an agreement in the next week or so, all they're going to do is kick the can down the road. And apparently, I believe that it's only going to be December when they're going to kick the can down the road to. So in a month's time, we're going to be talking about it all over again. So I think people are getting a bit bored on the subject, but it's definitely having an impact on the market. So we have to look at it right now to see equity markets grinding lower, to see the dollar grinding higher, to see that it's certainly having an impact.
Looking at the sterling, it looks very overbought at the moment, particularly against the euro and in terms of the cable as well.
Yeah, I mean, euro sterling, from a technical point of view, we've seen some pretty big upside ever since last week, really. And the tapering talks from the US, it was one currency pair which we didn't necessarily think would get touched by that. There could have been some sort of reaction, but we did tend to get quite a big reaction in the back of that, which was a surprise. Then the next day with the retail sales has really pushed sterling higher on the back of those numbers. It's been higher for quite a while now, but we've got figures at around 84.65 for euro sterling on the upside, which is really holding things up at the moment. So I think we're getting a lot of sellers coming in there. Every time we're testing that level, we seem to be coming back down lower again. So around that 84.65 level seems to be where the sellers are jumping back into the market. But we can't seem to hold any sort of real ground. The markets are very choppy around there. I mean, there's not a huge amount of news flow. Of course, we've had the Bank of England talking. We haven't had too much in the way of concrete data coming out of it. We've got GDP this week, which is going to be key to sterling, and that could really jump it. But we are in this range at the moment where 84.64 is really holding things on the upside.
Yeah, what about that GDP release? What are you expecting there?
Well, I mean, we don't expect anything massive, to be perfectly honest. We expect to see numbers pretty much in line as usual. But I think in terms of how we measure the economy, of course, because of Mark Carney's speech, we have to go back and look at the unemployment figures and see where they're coming down, but also the retail sales numbers. I think they're key. they kind of show what consumers are doing when they've got their hand in the pocket. It becomes a little bit more of a barometer. We saw those last week, and they were that little bit weaker. So I think looking at the fact you've had that good summer and that's now dying away, I think we could be in line to a little bit weaker in terms of GDP.